The broadcast is now starting. All attendees are in listen-only mode.
My name is David Williams, and I'm super pleased to be here today with you for our Market Thoughts program. Thanks so much for coming. If you're new to PageTrader, you can ask questions and make comments. Just type them into the GoToWebinar text box. I'll be very happy to address those. Our company is PageTrader. We're now in our 23rd year of providing market forecasts for traders around the world, just like you. Please be sure to read our trading disclaimer. Trading is risky. You can lose money and so on. This is at the bottom of each of our website pages. So thanks so much for coming today. So yeah, a lot has been happening. This week is going to be super volatile because of the Fed announcement that is on the 15th and 16th, tomorrow and Wednesday, kind of a two-day thing where it's widely accepted, of course, that we're going to be seeing rates that are raised during this meeting. So that's for sure. It's just by how much. So that's going to be starting tomorrow. It may take, I'm really not sure if they're going to give the rate tomorrow like they normally do, or if they're going to take into Thursday to do that. They'll probably give it tomorrow. So it's really important to be able to recognize that there's going to be explosive volatility, really incredible movement for probably at least a week after that announcement. It's going to be really big. What I do with the Fed interest rate announcement is, of course, if the market's trading normally like it is today prior to the announcement, I'm very happy. No, Wednesday is, tomorrow is Tuesday, so they'll give out the actual interest rate on Wednesday, the raise. But what I do is I've learned over many years to not try to chase really big returns from the initial shock from the market, the initial move, because there's going to be a whole week's worth of really great volatility. Many people just want to be in that first move, and they kind of forget that there's going to be a whole bunch of moves that will occur between then when they give the announcement and a week later. Those moves, those subsequent moves are going to be much easier to manage, much easier to handle, much easier to understand. So just wait. That's what I do. Some people might do very well with trying to anticipate what the Fed is going to say and what they're going to do or what the response is going to be. That's really not my thing, baby. I am really just saying that what is my thing, from Austin Powers, the movie. That's not my thing, baby. My thing is to have a great deal of certainty when I'm about to place a trade. It all has to come together. It's literally almost like I don't know what, it's like an aha moment where you just suddenly realize you've got it right. You've put it all together, and then you want to be in for that specific move. So that is what I'm looking to do, rather than try to, capture something that has a lot more potential risk to it. That's my thing. And I've just found that there's plenty of opportunities. The market will distribute all kinds of opportunities to you if you wait for them. And a lot of the, again, I feel for myself that what most people are really looking for, not only in life, but in their trading and their investing, is some real certainty. And that's what I'm searching for. I'm looking at the markets, trying to find something that I can be certain of. So we did that today over here on the left, Monday 314 with the S&P above 4213. In reality, we had people getting long at 85 way down here for this move. But by the time we really in my opinion, we're really certain that they were going to go to 40 with the S&P above 4213 and advance to 4240 to 41 should occur. They did do that advance. They moved up, and we had a swing high of 4239.75. Now, you may think that that's just a little, not much of a thing that they missed by one tick to get to 4240, but it actually is something important in our work, and it describes a market that really went up, even though it was a very easy to hold advance. they were under pressure by some amount to not be able to reach 42.40. And they should have been able to do 42.41, but they didn't, and they turned down. And that's why if you look on the right here, we had this chart. Market is in a weak position and will likely decline to 41.68 from here. That was around 42.16, and that was about 50 points worth of movement. And they're lower than that right now. We were looking for 41.68. They're currently trading at 41.61. There's some other indications we had, but this for lower prices, but this is the main target that we gave out, 41.68. That would occur in today's second half of the day. So if we were to put up a chart of kind of a half-day chart, we are now in the second half of today. There's only two halves. So this would be the first half, and this would be the second half. The first half made a low of 41.67. So it really all got completed 1 unit early in the first half of today. They still did do it and are still doing it in the second half, but they really rushed down there. And this was this was the part where they couldn't quite, if you bring up, say, a 30-minute chart, they just couldn't quite get to the number, and then they sold off pretty viciously. So it led to some pretty nice market action. This is the daily chart, so you can see where we are on the daily picture. And we do have some other forecasts because the market is below 4,300, and what that means to us into next week. And again, this being the 1 week early for the week of March 21st, the forecast that I gave out for March 21st, the week of March 21st, could actually happen in this week, given the volatility and so on that has been set up. But we do also want to consider that the market could firm up very nicely in advance of or at the time of the Fed announcement and be in a much better position. And if that's the case, there could be some really explosive moves to the upside. So again, we're not going to guess at it. We know that we're seeing weakness, not just because the market's going down. Down doesn't mean weak. Down can just be the market expressing itself, doing a natural thing to the downside. Like as an example, here's a 15-minute chart of this morning, and here's the market moving down. Is this weakness right here on the way to higher prices? No, this is just a natural pullback in an existing uptrend. What is weakness is when the market doesn't touch its target and fails there. That's weakness, as opposed to just pulling back in an existing trend or something like that. So when we see this, that alerts us that later when the market starts to really break important levels, that the weakness is going to be larger or more intense than normal. And that's exactly what we've seen today. So these are the two on the left-hand side over here for the morning advance, and the second part here. We didn't short it up here because when you see them miss a number, the very next bar could be the one that hits the number. So we can't be quite sure of that until later. But by the time we are sure of it, then we're also sure that it's going to go a lot farther than normal because of that weakness. See, so it is really like a story that's unfolding. And in many cases, you can sort of storyboard the market in your mind, if you will. And I've told you before that what I do is I go get the charts that are really the ones that are speaking to me clearly about the weakness, the ones that are speaking to me about what the target would be. And I put all of those on a page that I call the premise page. And then I have everything in front of me, and that page can change throughout the day. That page was, set up for this move here on the upside. And then later I had to change those charts after putting the premise, all the different charts together that would speak to me about this decline having to occur. So the purpose of the premise page is so that I don't have to jump around from one chart to another and get it all in my mind, in my mind's eye. I really want to be able to just flip to a page and see all the reasons that I'm in a particular trade. That's what I'm trying to do. There you are. So that's about it for today, but we're really excited about the, stuff that's coming. And I do want to take some questions or comments from you about anything that you have on your mind. Let's see if there's anything here, and thank you for these. Because the markets are pretty volatile today, I don't have as much time as I normally do. Rob is here and he says, anything new for soybeans? Yeah, we had forecast 2 days worth of, or even up to 3 days of sideways movement in the soybean market. And we did get that. This was back over here on the 10th, and the 11th was sideways. Today was sideways, but we really were hoping to see if the market could close above $16.74. Only because it's a relatively, it's kind of what we sometimes might refer to as a big dumb square, that number, but we call it that for a certain reason. It doesn't have to be closed above. It's not as important as a regular square, but if they did close above the 1673, 1674 level, that would be pretty pristine for us. So right now we happen to be flat in soybeans, and I just want to point out, this is the monthly chart for soybeans, and the market move on the upside may well be over based on certain reflected wave indications to the upside. We're still in March, we still have some time for them to maybe spike up and do a little more, but that's really, we're waiting for our next indication depending on how they treat that level. So thanks, Rob. And Samuel Cerny says, hi, David, have we found a bottom in crude for the month? I really don't know if we found a bottom in crude for the month. Let's take a look at the month. This is the monthly chart for crude. This is the weekly chart for crude. I didn't like what they did, although we're not out of the game yet, because this, if they close badly today, this would be considered a reflected wave breakout to the downside. That would mean that there was a bottom that they're breaking out of to the downside. And if we close above certain levels, we won't consider it to be a breakout. And if we don't consider it to be a breakout, then we're more interested in putting trades together to the long side in crude. I highly suggest that people trade in the micro for crude. If there is, I think there's a micro for crude, rather than larger contracts, unless you're particularly skilled and have, really have your stuff together. Most of the work of trading is the preparation for a particular trade. It's not like you're working and toiling out in the fields, but it is work. You do have to sit down and figure out who's in charge, of the market right now in terms of time frames. You have to go through your work to see what it is that the market's telling you, and then isolate those charts where it is telling you that, and a few other steps to get to the point where you have the certainty to put a trade on. Most of trading is preparatory. Now, I've been on the internet and I watch people who might be putting trades on, and they have they can just ascertain very, very quickly that they want to be long or short in the market, and boom, there they are. And it doesn't come quite that easily for me. I have a standard that I have to reach where I have a kind of an aha moment in my emotions and my mind, where I really can see that I've got it right. I need to have that before I'll take a trade. The fools in trading, if you will, are the people who are just looking for any emotion to give them an excuse to be in. Any emotion. It could be an emotion like, oh, I just feel lucky. Or it could be an emotion like, I just want to be in. Or I better be in because I'm going to miss out. All of those emotions are destructive emotions when it comes to trading. They don't really have anything to do with even partially deeper analysis of what the conditions of the market are. If you were to follow, if you were here in the office and to follow what we do, or to what I'm doing for that matter in the markets, you would see that I'm not looking for an excuse to be in the market. See, that's what most people are looking for. They're looking for an excuse, not even a real reason. They just want to be in. I just want to be in the game. I don't want to miss out. I don't want to see a move happen without me in it. I've been through all that. We've all been through that. I'm not making any judgment call here on people doing that, except to say that it's destructive. It doesn't work. And you have to understand at some point that that doesn't work. What does tend to work is a little more careful analysis of the whole set of conditions that the market is showing you. And then start looking around and putting those ideas a little bit together. And suddenly you might have your own aha moment where you can say, hey, this really is something that, it's almost like you're trading by exception. But you certainly don't want to trade just looking for an excuse to be long or short. The kind of accuracy, the kind of repeatability that you're looking for and you see us do from day to day comes from doing that work. That's what the work is. So, and I don't mean to make work sound like it's, toiling in a desert again, but it is mental work, and it is at the, later in the day, sometimes I'm just not up for doing it. It does get a little tiring to put all these ideas together and suddenly say, okay, I've got enough pieces here to say I've got to trade, and then your emotions are up and you're ready to, get in and so on, and you have the courage of your convictions. All of that takes energy sometimes later in the day. I just will pass on a trade because I just might not feel up to it at that point. So I'm not really overly concerned. And this is the old analogy I've told you about driving fast cars. The day comes where you don't have to keep showing everybody that you can get across the intersection faster than they can, because you can. See, you're kind of proving to yourself when you have that fast car and you get to the stoplight and you want to zip up ahead of everybody. You're trying to prove to yourself that you're the guy. You can do that. At some point, you get to a point where you say, I know that I can do that. And it's because I know I can do that that I don't really have to do it. I don't have to keep showing people because I already know it. So it's kind of like that with trading. Yeah, you're going to miss a trade here or there, but you know that you can do it. And you're just waiting for all the nice little circumstances to come together so that when you trade, you really feel great about being in that trade. You're not chasing or making excuses to be in a trade, which so many people, when I look on YouTube, I'm just amazed to see these people who video themselves as they're trading. And it's just, the things that they say and do, their reasoning for trades are really just excuses. That's all they are. They're just an excuse to be in the market. So thank you, Samuel. Stu is here and he says, hi, David. On Friday, you indicated that bonds made a daily bottom with more selling today. Would you say that the daily low is coming one day late? Actually, we took a loss on that, or some of our subscribers did. We were acting off of the daily bottom. The market slammed right through it today in bonds. And we've also told them where we now think bonds are going if they want to short from the earlier current prices when we had the meeting. So yeah, that daily sometimes reflected wave, they just push right through the number. It doesn't happen very often, but it's a really important thing if it does. And it's really important not to stay, you have to have a position, a place where you can say, here is where I'm wrong in this trade. And if the trade then turns out to be correct later, or if they reassert the original set of conditions, in many cases, it's a really good thing to get back in. But no, they broke that daily reflected wave bottom. They moved down, and we now gave out a forecast for where they're going to finalize. And all of this, comes on the week of where the Fed interest rate announcement is. So it is really a little bit unusual because of the news and other things that people are anticipating. And even the S&P may get a little weird just prior to the announcement. We'll see. Stu also says on Thursday, you indicated that gold is looking for completion on the downside for today. Has that been completed? We're waiting to see the close on gold today to see if that is going to give us the confirmation that we're looking for a move. Remember, it is important. I mean, just from our perspective, many people will say, well, I want to be long. They'll wait. They may have a target, or they may have a price, like a points target, like I'm only looking for 4 points or something like that. And if you don't have certain information, you're sort of relegated to having to think of things in certain ways. But I think the best way is to have an idea of what the market is likely going to do. Like, where is the market going to go? What's the most likely number it's going to hit? And trade for those numbers. Certainly take something off along the way to be sure. But as it stands right now, at least in the way that I approach markets, I wouldn't want to be trading for, I don't like arbitrary things. Like, I would prefer to trade for a move that it seems like the market is saying it wants to go to. And and I don't have to wait for every last little tick of that, but I do want to trade towards that number. So thanks, Stu. Fred is here and he says today's volatility is based on China news that has several new info, but you can find out the main result is China index swooned worse for 1 day since the 2008 crash. Wow, that is amazing. And this probably has to do with their lab leak or whatever, or their, not lab leak, but everybody knows this was a lab leak, right? I mean, all the other stuff, your government doesn't tell you the truth. Their government doesn't tell the truth. The lab was called the coronavirus laboratory, right? I mean, and it's the coronavirus that got out. There's more of these labs all over the country. Apparently, some of them are even in Ukraine. So we are just playing with fire as humanity to have these labs and these experiments going on. There's a war going on in Ukraine. If those labs are exploded and those nasty viruses get out, God only knows what goes around the world, right? And we could go into a free fall. I don't mean just the markets, but I mean society. So yeah, so we'll see what happens there. But anyway, yeah, thank you very much, Fred. I appreciate the info on that. Connie's here. Hey, Connie. Connie says, when are you on Ameritrade? We'll be on Ameritrade on Wednesday of this week. It's really recorded at about 5 in the morning with Ben Lichtenstein, and we'll give whatever information we have out at that time regarding crude oil and any other markets that we think are in position for important moves, S&P and so on. So that'll be on this Wednesday. Thanks, Connie. Fred says 1 day China drop of over 7%, which would be over 2,000 Dow points in a day. Yeah, no doubt. I've said before, you've heard me, we're going to have 1,000-point move at some point in the S&P. The circuit breakers won't allow it, but they're going to try. That type of move is going to come into play. Sharp, fast, vicious, wipeout. Let's see. John says, do you forecast wheat? I don't. We don't have a lot of call, and thank you for the question, John. We don't have a lot of calls for wheat. We do have a lot of interest in soybeans, but I don't have a lot of calls in wheat at this point. Wheat's been fantastic. I mean, the market has moved. It is a different beast than, say, even soybeans. You kind of think that everything that's grown in the ground would almost be like a sector, like a stock sector is, where you have a sector of alcohol stocks or a sector of financial. But I have found that that wheat is peculiarly different than soybeans, even if they are sort of a sector of things that are grown in the ground. It's a different market. And honestly, since we haven't had a call for it, I've never really spent much time trying to forecast wheat. But it is a fantastic lot of moves that it certainly has made. Some of the markets that we don't offer that I have looked at and played around with and I found interesting were lumber and coffee. Those two markets seem to be pretty good. But then the coffee market is the New York market, and I just got such incredibly bad fills. This is a long time ago, and maybe it's gotten a lot better. It's probably electronic. I'm sure it is by now. But It was terrible. I mean, the amount of slippage and stuff that you would get in a fast move, you would always get the bottom of the move. I mean, just no two ways about it. So that's when I started getting suspicious when you're doing this day in and day out, and you start seeing certain things happen. And this again was quite a while ago. This was in the 90s. So I mean, a lot has changed, obviously, but the floor brokers back then were just literally cooking the books in real time. That was the job. And it isn't easy. It's not easy to cook the books in real time in fast markets. It's hard enough just to keep track of a regular position. These floor broker guys had to be like mini geniuses in order to keep their inventory and what they were doing in mind while action was happening in front of them, filling orders and filling people at the lows and all of the things that they used to do. But I would trade in these markets, and no matter what would happen, I would always end up getting filled at the bottom. Like if I had placed a stop in a position and the market moved through the stop, we're triggering the stop, I always got out at the bottom. That's just how it always worked out with coffee. And I started to realize that that's actually not an accident. They were actually doing it. The markets, people may try to manipulate the markets, but people always say, oh, the markets are manipulated, this, that, and the other. Great. Let me tell you where the real manipulation is. It's on the door into the market and the door out of the market. Wherever there's people, there's going to be manipulation. And so I finally, even though I loved the coffee market, it traded really well, and it was kind of like the S&P in many ways. I gave up on it many, many years ago. There probably is something going on in that market now that would be interesting to take a look at again. So a lot of things have changed with the electronic markets, and some of my complaints about what has happened to me in the past, those were like 20 years ago, 25 years ago, and I'm not saying that that is the case now. But it really was, being a floor broker back then was a license to steal. They had all kinds of rules that they were given, that they didn't have to fill an order for a certain number of minutes, and that would give them time to cook the books and distribute, all their inventory at the lowest prices to the people who were looking for fills. It's at higher prices, and just one thing after another. So the general feeling that the markets are manipulated, I understand, but a lot of manipulation used to take place on the doorway into the market and the doorway out of the market, not really so much the market itself. Now, I don't know if it was not Shearson Lehman, they're gone, but there's some big bank that just recently got busted for a big client calls up and says they want to buy this much of, say, gold. And the broker, they want the market to go down so they can buy gold at a lower prices. And the broker can use something called, which is illegal, called spoofing. And spoofing is where you place a large number of buy orders or sell orders at a particular price. People watching the market assume that those buy orders are legitimate, and prices tend, well, first of all, even if prices don't tend to move towards those numbers, whether they do or not isn't even the point. The point is that it's deceptive to other market participants, because when the market starts to move towards those numbers, they pull their orders. And this is the brokerage doing that so that their client can then buy at those lower prices. The client doesn't want to buy at the current price. He wants to buy at lower prices. And a really big broker is going to try to, if they're dirty, they're going to try to manipulate the market in some way using spoofing. And they got fined, I think, $1 billion, which is, I think, one of the largest, if not the largest fine for people doing that. But considering that they made 30 billion, in the year, that's just sort of almost a cost of doing business for them. So anyway, just little stories. Let's see. Thank you, Samuel. Also, Fred says the USA has over 125 around the world. Yeah, so that is of concern. Shouldn't we be addressing that at some point? Because a lot of bad things could really go wrong if you've got really nasty viruses that are being cooked up in dishes, or blending viruses together that nature hasn't done. and all that. It's just a mess, really is. Why is it that one country has to feel like if it had the chance to, it would take over another country? Because human nature is bad. That's why. It's just too bad. And that's therefore everybody needs to apparently have weapons to defend themselves, and then everybody needs to. And now we're working on biological weapons, and it just goes on and on. Fred says, yeah, 26 labs in Ukraine with 3 very near. Yeah, that's unfortunate. Russia and February 24th, we had those 3 labs destroy anthrax. Obama ordered those 25 labs, which is coming out now, and those bioweapons were a reason Putin invaded. Yeah, it's a mess. And all of us are just living our daily lives while the government in the background, not saying anything to us, is toying with things that could wipe out entire swaths of humanity. So it's a mess. That's all I can say, really. So listen, that's everything that I have right now. We're still down at 41.60 basically. Here. It should be very interesting over the next couple of days. I hope you can be here. Thanks so much for listening. I hope some of the things that I tell you are somewhat useful. Like I've told you before, this is a skill. That's what this is. It's a skill. Anybody can learn this skill. The fact is that some people may have a proclivity with that skill. I didn't, but because I had to work hard to get the skill. But there are other people that if they had the knowledge, their skill, they have proclivity towards skill with this. It took me a lot longer, I think, to develop the actual skills involved in trading than it would for some other people who might have a natural knack towards that. But given and sort of eliminating the natural knack thing, or people having, a talent or something, it boils down to a skill. It really does. It's a skill that anybody could learn to do and could understand. And then once they get that skill, that's not the final dimension. They have to then be able to live with themselves when they're applying the skill, i.e., executing orders in the market and staying with positions. That's where you have to, that's the final frontier, to use a Star Trek term. The final frontier of trading is being able to manage and understand what it is that you can deal with and live with on a day-to-day basis, and not get sucked in to people on the internet who are even not trying consciously. They're putting information out there that makes you want to act badly, because sometimes when you act badly, you win. Sometimes you act badly and you win big. But this isn't about winning. I hate that term in trading. I really despise it, because it isn't a win at all. It's a win if you gamble, right? And if you use the markets to gamble, it's a win. I'll give you that. But it's truly a gambling term, and it means exactly what it is. You won. You didn't create that. You didn't develop the idea and do it correctly and have the market run to your numbers. You just won. It just happened to go your way. Well, I'm not going to come into an office every day and gamble. I'm not looking to just throw money out the window trying to hope that I'm going to be right. I have to know that I have a real reason that I would be right? I think most of you would want that. That's where the certainty is. If you want to gamble, come to Las Vegas. You'll do better in the casinos, you really will, than you will in the markets gambling. Go take a look around YouTube and watch people. They video themselves, if they're doing it authentically and if it's not a nonsense thing, where you can see the decision-making process is really very, very thin. Not that it has to be, CIA level deep, but it's very thin. It's surprisingly thin. And then they get in and they just live with whatever the results are. And there's video games now on the internet where people can play video games, which are perfectly just games of chance, and they're just literally gambling. I don't know why somebody would do that over learning how to do this in the markets, where you can really have much, much higher probability of being correct. So there you are. I'll leave it at that for the time being. I hope you can be here tomorrow. I'm not sure we're going to be able to do market thoughts tomorrow or Wednesday, but I will do every attempt I can to update you on any things that we're thinking. And I so appreciate you coming today, and I hope you stay well. Stay away from local bioweapons labs if you can while living your life. Try to stay out of those areas just so you'll have a better life, not having to investigate those. Okay? All right. I'll see you here tomorrow. Thanks so much, everybody. See you then.